Simply Wall Street states it's only natural for many investors, especially those who are new to the game, to buy shares of sexy stocks with a good story, even if those businesses are losing money. But as Warren Buffett has mused, if you've been playing poker for half an hour and you still don't know who the patsy is, you're the patsy. Hello and welcome back. My name is Brandon Watson. Today in this video we're going to go over a stock that has the potential to earn you 25% over the next month or two. Now I know this isn't a hyped up YouTube stock, but right now those are all getting wrecked, so let's go over something that's building up quite nicely. Artisan Partners is a publicly owned investment manager who provides services to pension and profit sharing plans, trusts, endowments, as well as several funds. The firm invests in the public equity and fixed income markets across the globe, managing separate client-focused equity and fixed income portfolios. Before jumping into the daily charts, I want to first show you why I think APAM is a great consideration in the first place. Taking a look at the 20-year, 1-month chart, you can see that APAM's share price has been seeing an increasing amount of volume the last several months. This, along with the fact that their EMA lines are all sloping up and crossing over the 200, is extremely hard to do on something as large as a monthly chart. Cross a couple EMAs on a 5-minute chart, who cares? But not only cross them on the monthly chart, but get here just in time for the uptrend, and that's a different story. So moving on to the daily chart, you can see that this company has been withstanding the year quite nicely. Recently upgraded to a ZATS number 2 buy on the 16th, APAM's share price has been seeing a nice accumulation of shares between the $45 to $55 levels. Compared to all of last year, you can see that much of the volume being traded so far for 2021 has been slightly higher than normal, which, when you think about it, is a good thing to have when a lot of stocks are currently going through wild fluctuations on barely any volume. It's nice to see a stock accumulate shares with increased volume for a change, compared to the lower caps forever downtrend that they're currently in. Two things to note while we're here are their earnings that are coming up, and the fact that the TTM squeeze turned into a bullish buy signal. This signal, according to Thinkorswim, is good only up until 2 dark blue bars in a row. Though remember, take this with a grain of salt as indicators are crap, and price action combined with volume are king when studying charts. Now, as we move to the weekly chart, we can see that ever since April of last year, APM's share price has surged up and trended on the 9 EMA very well. It wasn't until a week before their most recent earnings that the share price fell due to uncertainty before rallying back up on a decent earnings report. Ever since then, price has been building off the old $46 resistance before popping up and over $55 this past week. One thing to note again here is the TTM squeeze building up, which hasn't been released yet. And assuming we get a squeeze in the right direction, this could be fairly good. One last thing to note here is the fact that both the 9 and 25 EMA are sloping upwards above the 200. This is exactly what you want to see when looking for stocks to potentially move higher. So now we extend these lines and look as far back as TOS allows us, you'll see just where the current support and resistance levels are coming from. Not only that, but we can also start to lay out some potential price targets for APAM thanks to their share price already going as high as $71 back in 2014. As of right now, there are 3 price targets to focus on: the $60, $65, and $70 levels, which would represent a 3.5%, 13%, and 25% price increase from where it's at today at 56.3. But hey, if you can stack a couple of these onto your account each month, then you can easily 2x, 3x, or 4x your account within a few short months the same way that I did. Which is much better than holding and hoping that something that once was a good bet turns out to be a good bet in the future when the chart is clearly saying something otherwise. Moving over to FinViz, we'll take a look at a couple things I like to take note of when doing my own DD. First and always is the average price target. Why? Because I want to know we still have room to move away from my entry if I start to scale in. Looking for stocks that other analysts believe can move higher is good for your research. Looking for stocks that have already moved past their average price is gambling. Now, we have relative volume, which right now sits at 0.93. I would prefer this to be over 1, though since this last figure was updated for Friday's numbers, I'm not too worried about it. Friday isn't always known for having the most volume, as people go on early vacations and such. Beta sits at 1.89, which is good because it shows that APAM's price is more volatile than the average market. We want this to be above 1, but we don't want it to be so high that the volatility and direction is hard to predict. We only want things that are easy to understand and not stocks that leave you wondering what the hell is going on each day. Leave that to the day traders and investors who plan to ride or die with the stock. And on that note, are there any institutional investors even interested in this company? Well, you tell me. It's 83.9% institutionally owned, and their insiders have stake worth $165 million in themselves. And like this article states, I would find that kind of skin in the game quite encouraging. And if you want a little more encouragement, Investors Business Daily states that 10 artisan funds were recognized for beating their benchmark in all 4 periods examined: 1 year, 3 year, 5 years, and 10 years through the end of 2020. Which would explain why APAM has been back on the rise ever since March of last year. This also corresponds with the recent news on TOS that Artisan Partners' assets under management had grown for the month of March, going from $161.5 billion in the month prior to $162.9 billion. also up from the 95.2 billion they managed at the end of March of last year. So will APAM continue to rise? And if so, where do you think it's going to head to? Drop a comment below. I always love to hear your feedback, and I hope you all have a great weekend.